Hey everyone, this is Kirk here again at optionalpha.com, and thank you so much for checking out our video tutorial here where we go over all of our opening, closing, or adjusting and hedge trades. Now today we only had 2 closing trades and then 1 hedge trade that we got out of. So no opening orders today, a lot of working orders, but just really nothing filled in the market. It was kind of a really weird day with the market. It was down and then it kind of rallied towards the close. So we'll see what happens tomorrow and see if we can't get some more fills in. On the closing side, though, we did actually close out 2 nice trades. One was the Priceline vertical debit spread that we had. And so we went ahead and sold back to the market our PCLN July. So these are July options. We sold back to the market our 1280, 1275 debit put spread that we originally bought for 255. So we sold that back today for 355. Made a nice $100 profit on it. Again, this is just a 1-lot trade, so a very small trade in our portfolio and just a means to stay active. And we've really only had this trade for, I think, about a week and a half now. So pretty good return on our investment for about a week and a half worth of money. Now, why do we get out of this trade now? Why didn't we just let this thing continue to ride lower, right? Well, 2 things really happened for Priceline that made it really nice of us to get out of the trade. One is that we actually kind of picked almost the top of the market in Priceline, which just rarely happens, and it's just a lucky trade. And the market continued to move down consistently for about 8 or 7 days in a row. I haven't counted them out, but I think it's about 8 or 7 days in a row that the market's moved consistently day after day lower. And just like we had traded Priceline after this consistent move up, now we have that consistent move down right against the position in our favor. So we have to be cognizant of that and just take what the market gives us, right? The market has done exactly what we wanted it to do. Priceline has moved lower, even in the face of rallying stocks across the board. So the market moved down. Implied volatility has gone up just a little bit in Priceline as well. Again, the market gave us everything we wanted it to. We have to be cognizant of the fact that this stock has all the way between now and July expiration, since it's July options, to actually turn around and run higher, and we don't want that to happen. So we went ahead and closed out the trade. We'll take our money off the table and run with it. The other trade that we closed out today is a trade that we've had on the books for quite a while, actually, and this is our Yahoo custom trade. And so the reason it's custom is because we did something a little bit different a while back with Yahoo, is we traded the 36-37 call spread. So we did buy that debit spread, and then we went ahead and sold 1 naked 42 call against that position. So we're still dealing in all calls, so you can see that these are all call options. But we had originally the 36-37 call spread and sold the 42 call. Now by doing that, we actually took in a small credit of about $1. It doesn't mean that we were necessarily wanting to make that money, but what that did was eliminate the downside risk of the position. So if Yahoo traded basically anywhere between 43 and below, we would not lose any money on this trade at expiration. The sweet spot obviously is somewhere between 37 and 42 with Yahoo. Now it started to get into that range today, and we just had a good opportunity as the stock is rallying to get out of the trade and make some money on it. So this is something that's a June option, so there's about 10 days left to go at expiration. We pretty much waited all month for this to happen, and kind of now that we're in that territory where we could make some money on this trade, we decided to go ahead and close it out for a $42 credit, making $43 overall. Now the max on this trade was actually $100, so we've made almost 50% of what we could potentially make on this trade. So again, it's a really good trade just to close out and get off the books, especially because Yahoo's starting to rally here and we don't know if it might tip over with the rest of the market, etc. So we waited pretty much all month for this rally to happen in Yahoo and kind of rally up towards our strikes. But really good trade, really like these custom trades. We're going to make a couple more of those in the next few weeks. All right, and then the last one that we want to talk about tonight is the adjustment that we made to Netflix. This is a very, very similar adjustment that we made just last week to Netflix, where we just basically rolled up our current put spread or our put naked option below the market for June. So we still have this kind of weird diagonal looking pattern in Netflix. We had originally bought the 370 calendar for June and July in Netflix on the put side. As Netflix has continued to run higher, we have continued to roll up just the short June option. So the short June put, we rolled from 370 to 395. Then today we rolled it from 395 to 405 and took in another $110 in credit. So again, just continuing to reduce our risk by taking in this credit, all assuming that Netflix is going to stay basically where it is now or higher between now and expiration. So So if you see here with Netflix, the stock continues to move higher, and we basically rolled up our 395s up to around the 400 range. If we take a look at the actual Analyze tab here of Netflix, you see what our position looks like currently as far as a profit loss diagram. It has, again, this kind of very, very similar diagonal type shape because we are still trading different contract months and trading different strike prices. So now we are long the July 370 put, which we've always been long, and we're now short the June 405 put, which is a little bit higher than that 370 put. So this is really where it creates that kind of bend in the graph around 405. So we still have an opportunity here that even if Netflix continues to move lower, then we actually could potentially make a little bit more money than we're actually going to end up with if we end up with the money at all after the credits and stuff. Then we actually end up with a little bit more money if Netflix continues to move lower and kind of pins itself right around 405. But if Netflix just continues to move higher throughout expiration in the next 10 days or so, then we obviously don't really make or lose any more than we have obviously gotten, but we did take in an additional credit. So it's going to be really interesting to see where this thing ends up. We might actually adjust it one more time, and this might actually end up turning out to be a nice winning trade instead of a big scratch loser. So we'll keep you guys updated with that one as well. So as always, I hope you guys really enjoy these videos. Please let me know if you have any comments or questions on any of the trades that we did today. You can ask your comment right below this video in the membership section. I'll get back to all of those tonight or tomorrow before the open, and happy trading.